Hello, Tesla is going parabolic, so is the market going to crash? Let me share with you my views today and stay tuned if this interests you. Yeah, they say the party will come to an end someday because, right, if you look at it, uh, Tesla went up and then came down, went up and then came down. So every time when it go up a lot, it will come down by a lot. So see, this one went up a lot, came down by a lot. So this one going up a lot. Do you think it's going to come down a lot again? Yeah, we will never know. So they are saying that see Bitcoin, right, went up a lot, then it crashed. And Tesla, the price action seems like it's mirroring like the Bitcoin, so it's going to come down a lot. And if you look at technological stocks, right, based on historical data, okay, so do you remember the 2000.com bubble burst when the market went up a lot? Can you see after that what happened? Boom, it came down a lot, right? So, but this one is not because of the tech, this one because of the debt, right? Debt issue, and therefore uh, the mortgage crisis, a subprime mortgage crisis, and now it looks like it is going to be another bubble brewing, and it's going to come down a lot. Okay, and one of the reason is you can use PE as your indicator to know whether is it too high or is it too low. Yeah, I kind of I can't deny the fact that there's a possibility because if you look at it, right, the history, in the past history, PE ratio always been between for S&P, is between 20 to 25. As long as it's hover around 20 to 25, there will always be a dip. Yeah, 20 to 25, there will always be a dip. But lately is different. Okay, so except for 2000 and 2008, the PE ratio went sky high. Yeah, before it dipped. So right now, is it expensive or cheap? I don't know. If you compare it to 2000 and 2008, it is considered PE quite low. If you consider to the historical average, it is quite high because his historical average is at about 15.5 plus or 16, okay, around there. So we are, based on PE ratio, we are considered expensive. Are we time for deep? There's a possibility. Okay, so right now, if you look at it, the Russell 2000 is at 59 PE ratio. So average PE is 84, and Nasdaq, the PE right now is 31, average is 34. For S&P right now is 27, average is 15.79. So it depends on which average you are looking at. Are we too expensive or too cheap, right? So we could be, if you look at Nasdaq is at fair value, probably going to pull back soon. We don't know, right? Okay, S&P is considered too expensive right now, and Russell 2000 is hard to calculate, but based on the PE, if you look at the average, it's not too expensive lah. So is it going to come down? If based on the index PE, maybe not yet lah. Okay, but if you look at PE, right, when PE is sky high, so does it mean that the price will always come down? Not necessary, you know. See, the P was very high at this point, right? And then did the price come down? It didn't. It continued to go up, no? So and PE went down, but the price continued to go back up. So I would not use PE as a good indication whether the price is going to go up or going to go down. Yeah, I really won't do that. Okay, so what does PE really means? High PE simply means the stock price is considered expensive relative to earning. Low PE simply means, right, the stock price is low or cheap relative to earning. However, it only tells you right now whether price is expensive or cheap. It doesn't tell you whether the price is supposed to go up some more or come down already. It doesn't. This is one mistake a lot of people are making. Okay, so high PE doesn't mean that the price must fall. Now check this out. In 1998, S&P 500, the PE was at 32.6. High or low? Super high, right? Average is 15.79. Remember, just now we show you the chart. So what happened to the subsequent year? Subsequent year, the market went up by 21%. So because of this high PE, if you didn't buy into this market, you have lost a chance to make 21%. Correct or not? Okay, let me give you another example. In 2002, the PE ratio was 31.9. Expensive or cheap? Expensive, right? Because average 15.98 again, 79 again. So subsequent year, what happened? The market went up, gained 29% overall. So again, if you think that this P is very high, you didn't buy, you miss another chance to make 29%, correct? And in 2008, where a lot of people feel that the P ratio is ridiculous at 60.7. This is way too expensive. So you didn't buy, right? What happened? Subsequently, the following year, 2009, the market went up 27%. Now that PE was high, it's mainly because, right, earnings was depressed due to recession. So understand that whenever there's recession or the economy is doing bad, right, it will cause the PE to be high. So it's, you cannot use the PE to think that, oh, high PE means market is going to come down, low PE means the market must rise, right? Because see, low PE doesn't mean the stock market must rise. In 1980, the PE ratio was very low at 9.2, correct? So what happened to the subsequent year? In 1981, the PE fell. Okay, so PE was low because, right, they believe that the earning is going to suck. This is the outlook. This is the forward-looking outlook. So the market is quite efficient. They always price in before the things happen, because stock market is 6 to 12 months ahead of the real economy or the real earnings, right? So when the market know that in the future looks gloomy, what happened to the stock price? Come down first. Correct. So when the P is low, it doesn't mean the price is about to rise. It simply means, right, maybe the forecast is not so good. There's a possibility, right? Okay. Look at another example. All right. In 1990 and 1930 and 1931, P was low. But check this out. 1932, the price went down. In 1939, 1940, P was low. Check this out. 1941, the market went down. And in 1957, P was low. So what happened in 1958? The stock price went down. So therefore, low PE doesn't mean low risk. Low PE doesn't mean your price is about to go up. And high PE doesn't mean, right, your price is supposed to come back down. High PE can mean that the future is good and the price is going to go up some more. Possible, right? Okay, so how about the individual stock? So high PE, it means the share price is considered expensive as of now. So the price to earning ratio is considered high. And check this out, Zoom video. The PE is 1,550. High or low? High or low? You dare to buy or not? Okay, so it's very high, right? And let's take a look at some of the other stocks. For example, Facebook. Now, when Facebook first IPO, right? Okay, look at the PE at the highest point, 1,279. So this was the PE, right? Check out the share price. So when eventually the PE will even out, right? Okay, and check out the revenue. Check out the revenue. Revenue continue to go up. Check out the share price. The share price continue to go up. The PE ratio, when it is high, it doesn't mean that the share price will drop. So Facebook has gone up eventually. Okay, and let's take a look at Amazon. Amazon, at one point, the PE was 3,633. Wow. So check out the share price. Share price, did it come down? And as the revenue goes up, what happened to the share price? Continue to go up, right? And then after the PE kind of like, more normalized. Okay. So then let's take a look at Salesforce. Now, Salesforce, check out the PE. At the highest point was 10,234. And check out the share price. Did it go down? It didn't, no. When the PE went down, the share price did not go down, no, and the revenue continued to go up. So it kind of normalized. Okay. Now the question is, do you believe, right, that Tesla is going to be like one of these stocks? That one day, as the revenue continue to go up and the PE ratio will normalize and everything will normalize and the share price will continue to go up. Okay? Is there a possibility? And let's take a look at the PE ratio of Salesforce in the history. Now, I'm not able to do the max because I didn't subscribe to this particular website. The PE on average has always been about 300 to 400 points now. Okay? And always been very high on it. So can high PE be the new norm for the stock? There's a possibility. Okay? And for Tesla, right now, its share price spiked. Technically speaking, you don't have PE yet, but some people are able to calculate the trailing 12-month PE and they are now considered quite high. But they are still relatively new, right? And their revenue has been going up. So if let's say revenue continue to go up and the future outlook of this business is going to be strong, and think about 10 years ago, Amazon, think about 10 years ago, Facebook. So do you think that Tesla is going to be like Amazon, Facebook, that type of stock? And 10 years later, Tesla is going to be super strong. Do you believe? If you believe, right, then you should hang on tight. Sit tight. Because if you think that today the price is expensive, then 10 years later you may regret. Correct or not? It's just like 10 years ago, share price of Facebook and share price of Amazon is dirt cheap. Now it's very good price, very good return. And no need to look at Facebook and Amazon. Just look at Tesla. Tesla, a lot of people will be like, oh yeah, I should have bought it when it started IPO, right? You will never know how you know Tesla is going to be so strong. And now, when just last year, I think $200, right? Tesla was $200. If you bought it at $200 today, you have 7x your return. No? Okay. When the market did a dip because of the COVID-19, the share price went down to about $361. You say you're gonna, if you bought it there, then wow, now you have another good return, right? You cannot think of it that way. That means you always know when is the bottom. You know, man, cannot be one. Okay, so if it is like that, when you look at the potential of the company, when you buy share, you look at the potential of the company. If the potential of the company you think is going to be good, then you can take a bet on it. Okay, so that is how I make my decision on Tesla as well. All right, so I hope you have find this video useful, and if you find this video useful, can you give me a thumbs up and do help me to comment a box to let me know whether is it useful or not useful, because I'm doing I want to get that sentiment to understand what kind of video should I continue to produce. Okay, so thank you very much. I'm Jason Strongerhead signing off, and I'll see you again. Bye bye.